Today, we're talking about a very specific shift in mindset that's taking over the professional landscape in Dubai.
Hmm.
It used to be a conversation entirely about velocity. How fast can I grow here?
Right, how quickly can I scale?
Exactly. But that narrative has fundamentally changed. Now, the question founders and professionals are asking is much more grounded. They want to know, can I actually stay here long term?
It is a massive shift. We aren't looking at a transient workforce passing through for a tax-free paycheck anymore. The data supports this change in thinking quite aggressively.
Yeah.
If you look at the population structure, expatriates make up somewhere between 88 to 89% of the UAE's population.
That is a huge majority.
It is. And these aren't just short-term visitors or tourists. Many have built entire careers, raised families, and established their entire lives here.
And you can see the financial commitment reflects that. It's not just rental money circulating anymore.
Absolutely not. In 2023 alone, Dubai recorded over 634 billion dirhams in real estate transactions. Yeah, that volume signals a level of commitment that goes far beyond a temporary work assignment. People are buying homes to live in, they are putting down roots.
Because they see a future here.
Exactly. And the government is looking ahead at the demographics and realizing they have a looming issue if they don't adapt. The geriatric population in the UAE is projected to increase fivefold or more by 2050.
That is a staggering statistic, fivefold. It completely challenges the old model of just working until you were 60 and then going home.
Because for a long time, home was somewhere else.
Right.
Now, for many, this is home. So the policy response has been to create tools to retain those experienced professionals, the investors, and high net worth individuals beyond their working years.
And that is where the UAE retirement visa comes into play.
Yes. It is a specific policy tool designed to bridge that gap and retain that human capital.
So let's get into the mechanics of this, because retirement is a loaded word. I mean, in many places, it implies you are checking out of the economy. But here, the regulatory framework defines it a bit differently. Right. At its core, the retirement visa is a renewable 5-year residence permit specifically for expatriates aged 55 and above.
Okay.
But the defining feature, and this is the key distinction from what most people are used to in the region, is independence.
Independence from the corporate umbilical cord, essentially.
Correct. Unlike standard residency, which is almost always tied to a company or an employer sponsor who holds the power, this visa does not require an employer.
It is based entirely on your own financial stability.
Exactly. You are the sponsor of your own existence in the country.
That's a crucial pivot. It changes the dynamic from staying because you have a job to staying because you have the assets.
Yeah.
And honestly, for a lot of founders or senior executives I talk to, they aren't looking to sit on a beach all day.
No, not at all.
They want to stay active.
Precisely. The target profile here is interesting. We aren't necessarily talking about people who are completely stopping all economic activity.
Many applicants are transitioning out of full-time 9-to-5 employment, sure, but they are still managing investments, they are handling rental income, or they are managing their savings. It allows for a transition phase rather than a hard stop.
So if you secure this visa, what does it actually entitle you to do? What are your rights on the ground?
The primary privilege is the residency itself, living in Dubai for 5 years, and it is renewable.
Okay.
But practically, it allows you to sponsor a spouse and your eligible dependents, which is critical for keeping families together.
Makes sense.
You can maintain your bank accounts, access local services, and manage your property and business interests just like any other resident.
And just to be crystal clear, because this comes up in every conversation about long-term stay, this is strictly residency. We aren't talking about a passport here.
Yes, that is an important clarification. This is residency, not citizenship. But for the long-term expatriate who has built a life here, it offers the ability to stay without that anxiety of what happens if my contract ends next month.
Okay, let's unpack the eligibility, because financial stability is a broad term, and the government here is very specific about how they quantify that. It is not a vibe check. It is a math problem.
It is absolutely a math problem. There is a base requirement regarding the individual. You must be 55 years or older.
Right.
Alternatively, you can qualify if you have worked for not less than 15 years, whether that is inside or outside the UAE.
Well, that is interesting. Inside or outside?
Exactly. But the core of the approval process rests on 3 specific financial pillars. You have to prove stability through one of 3 routes.
Let's walk through those routes, because the devil is absolutely in the details here. The first one, And probably the most common for people who've been here a while is property ownership.
Right. Route 1 is property ownership. The headline requirement is that you must own a property valued at a minimum of 1 million dirhams.
Okay.
But, and this is where people often get tripped up, there are strict conditions on the state of that property.
It can't just be a rendering on a billboard.
No. The property must be completed and ready. Off-plan properties or properties that are currently under construction do not qualify for this specific visa.
Because it is not a stable asset yet.
Exactly. It is a future promise. They want to see a tangible, habitable asset.
And this is where the financing conversation gets tricky. Because a lot of people buy property in the 1.5 or 2 million range, but they have a mortgage.
Yes.
If I buy a 2 million dirham villa, but I owe the bank 1.5 million, technically the property value is 2 million. Does that count?
No, and that is the most common misconception. Mortgaged properties are accepted, which is practical, but the authorities look at the equity.
The equity.
They assess the portion you actually own. That paid-up equity portion must meet the value threshold of 1 million dirhams. So in your example, if you have only paid off 500,000, you don't qualify, even if the house is worth 10 million.
That is a massive distinction. You can't leverage your way into this visa. You have to have the cash deployed.
Exactly. It's about net worth, not gross asset value.
What about if you own it with a spouse? A lot of couples have joint title deeds.
Joint ownership is permitted, provided that the applicant's individual share meets the minimum value requirement.
Okay.
It gets a little complex with the math there, but generally the primary applicant needs to demonstrate that financial weight.
That's clear. Real estate is great, but it's illiquid. If you don't want to lock money into bricks and mortar, the second option is cash savings.
Route 2 is the savings requirement. This is for those who prefer liquidity, or at least paper assets. You need to maintain 1 million dirhams in a UAE bank.
But again, nuance matters. You can't just borrow 1 million dirhams from a friend, put it in your account for the statement date, and then wire it back the next day.
Not at all. The authorities are way ahead of that trick. The mechanism usually requires the funds to be placed in a fixed deposit.
Okay, for how long?
The typical period they look for is a 2 to 3 year lock-in. You will need an official confirmation letter from the bank regarding that lock-in period.
So there is a significant opportunity cost here. You are effectively freezing that capital.
You are. And in a high-interest environment, a fixed deposit pays out, but you lose flexibility. Authorities review the account history rigorously. They want to ensure the funds are genuinely yours and genuinely maintained.
They are looking for stability.
Right, not a snapshot of wealth.
That aligns with the idea of long-term security. Now, the third route is interesting because it's for those who might not have 1 million in cash sitting around, but they have strong cash flow.
Correct. Route 3 is the monthly income requirement. You need to demonstrate a stable monthly income of at least 20,000 dirhams.
Which, in the grand scheme of Dubai executive salaries, is actually quite an accessible threshold. What counts as income here?
It's fairly broad, but the key word is verifiable. Pension payments are the most obvious one, but it also includes rental income, dividends, or overseas retirement or annuity income.
Wait, rental income counts. So if I have two smaller properties that don't add up to the 1 million equity threshold, but they generate 20,000 a month in rent, I could use the income route instead of the property route.
Theoretically, yes, as long as you can prove the consistency in source.
That's a very strategic workaround. But I assume the documentation burden is higher here because cash flow fluctuates.
It is much higher. The focus is on consistency and traceability. You need bank statements showing the flow over time and definitive proof of source. They need to see that this money comes in regularly and, crucially, will continue to come in for the foreseeable future.
Is there any flexibility if you have a bit of both, say 500,000 in savings and 10,000 in income?
There is a combined option. A mix of savings and income can be assessed individually.
Oh, perfect.
This is really designed for people with structured finances, maybe a portfolio career or a mix of assets. They might not hit the 1 million dirham threshold in a single lump sum, but have a very strong overall financial position.
That makes sense.
It's a bit more subjective in the assessment, but the pathway exists.
So once you have identified your route, whether it's property, the fixed deposit, or the income stream, you have to face the bureaucracy. What does the paperwork actually look like?
Regardless of the route, there are standard documents everyone needs. Passport valid for at least 6 months is standard. If you are already a resident, your current UAE residence visa and Emirates ID.
Right.
Then, obviously, the proof of your chosen financial route. The bank letter, the title deed, or the proof of income.
And we can't forget the medical side.
No, valid UAE health insurance is mandatory for approval. You can't retire here without coverage. And once you have the entry approval, you still have to go through the standard post-entry formalities.
The medical test and biometrics.
Yes, the medical fitness test, which is a blood test and x-ray, and the Emirates ID biometrics, those are standard for any residency in the UAE regardless of age.
Now here is where it gets a bit technical, but it's vital for anyone actually doing this themselves. The application process actually splits into two different government bodies depending on which financial route you chose.
That is a critical strategic split. If you are applying via the savings or income route, you are processed through the GDRFA. That is the General Directorate of Residency and Foreigners Affairs.
Okay.
The focus there is primarily on document review, checking the bank statements, the letters. It's largely administrative.
But if you go the property route,
Then you are processed through the DLD, the Dubai Land Department, because the asset validation, checking the title deed, the valuation, the completion status, is the core of the eligibility. The DLD handles that verification.
so the user experience is different.
Very different. For savings or income via GDRFA, you are creating an account on the portal and uploading documents digitally. It's a very modern, streamlined flow.
And for the property?
For the property route, you submit through the DLD system. In some cases, the DLD may require a visit to a service center for verification, specifically to validate the title deed.
So if you hate going to government offices, the savings route might be digitally easier, even if financially heavier.
True.
Once you submit, what happens next?
There is an initial approval stage. The authorities review the eligibility, checking the property value, the deposit confirmation, or the income stability.
And the costs. We should talk about the investment required for the visa itself, because nothing is free.
The cost is approximately 3,714 dirhams and 75 fils per person.
I love how specific that is. The 75 fils really sells it.
It does, doesn't it? Someone in the finance department calculated the exact cost of the stamp. But it's important to understand this is a bundled fee.
Okay, what does it cover?
It covers the entry permit, the status adjustment, the medical test, the Emirates ID, and the stamping. It's remarkably efficient for an all-in cost.
And timing. Are we looking at months of limbo?
Surprisingly, no. The initial eligibility review can be very fast, sometimes 48 hours if the documents are clean.
Wow, that is fast.
Yeah, but the total cycle, including the medical and ID issuance, typically takes 2 to 4 weeks. Property applications might take a bit longer just due to that asset verification step at the land department versus the digital check at GDRFA.
I want to circle back to the lifestyle aspect. We established that this is for people transitioning out of full-time employment. But does that mean you are strictly forbidden from working? Like, if you get bored and want to consult, is that illegal?
It's a nuanced restriction. The visa does not allow you to take a salary job with an employer.
Okay.
You cannot be on a company payroll in the traditional sense where they issue you a labor card.
But you aren't forced to be idle.
Not at all. You are permitted to manage your personal investments. You can receive rental or investment income. Crucially, you can act as a shareholder or investor in a business.
So you could sit on a board.
Exactly. You can sit on a board. You just can't be an employee. The residency must be supported by your financial independence, not a salary.
That's a fair trade-off. Now, I have a note here regarding specific zones. We need to mention the Meydan free zone.
Yes, that is an important disclaimer for anyone living or operating there. The Meydan free zone does not issue or sponsor these retirement visas.
Good to know.
These come directly from the federal or emirate-level government authorities, either the GDRFA or the DLD. Meydan is a separate entity and isn't the channel for this specific program, so don't go to their office asking for this.
Right. Now, usually when people look at long-term residency, the big competitor to this is the golden visa. Why would anyone choose the 5-year retirement visa if the 10-year golden visa exists? How do you choose?
It really comes down to a strategic choice based on your life stage and, frankly, your liquidity.
The golden visa is the gold standard, obviously.
It is. The golden visa is 10 years versus the retirement visa's 5 years. And the golden visa has no age limit, but the barrier to entry is higher.
It's the money.
It's the money. The retirement visa is based on moderate savings or property, 1 million dirhams. The golden visa typically requires a real estate investment of 2 million dirhams. So there is a massive gap there.
So the retirement visa is essentially the bridge for people who are comfortable but maybe don't want to lock up 2 million dirhams in a single asset class.
Exactly. It is the straightforward path for those who meet that age profile, 55 plus, and have that 1 million dirham stability. but perhaps don't meet the higher investment thresholds required for the Golden Visa.
Right.
It's also for people who might be renting but have the savings. The Golden Visa savings route is very difficult to qualify for. The retirement savings route is clear-cut.
It seems like the UAE is really trying to tell a story of continuity here. They don't want people to cash out and leave the moment they turn 60.
Continuity is the perfect word for it. Retirement in the UAE is about staying connected to an ecosystem where you have already established your finances and your personal life.
It transforms the location from a place where you work to a place where you live.
It frames the visa as a structural solution. It's for those who have built roots. It offers a renewable way to remain part of the country's future without that employment dependency.
Which is huge.
It acknowledges that value isn't just about the hours you work today, but the capital and stability you bring to the economy long term.
And ultimately, it ends on that note of financial independence. It provides long-term security for those who have contributed to the economy and want to remain a part of it. It's a smart retention strategy.
Indeed, it benefits the individual and it benefits the state. A rare win-win in immigration policy.
When you look at these frameworks, I want you to consider a broader question. What happens to the corporate culture of a city when its most experienced veterans no longer have to leave the moment their final contract ends?
It changes everything.
It fundamentally reshapes mentorship, investment, and institutional memory. That is something worth keeping an eye on as this policy matures.